to see how the where to see where the market is going.
Right.
While
So
the
on
1 hour,
the 4 hour is where to see where the market is going, right? Where the market is going, right? And you want to know how to do the analysis. You go on an hour chart to do analysis. On the 50 minutes or the 5 minutes, you can do entry. Okay, very important. Okay, so 5 minutes and 15 minutes is where we do entry. Right? You can also do laser entry on a minute or a 5 minute as well. Depends on you. For me, I go on a 5 minutes or 50 minutes entry, analyze on a 1 hour chart, and see where the market is going on a 4 hour chart. Now the 4 hour chart, you may want to write this down, guys. This is known as a bias trend. Bias trend. Now the reason why I call it bias trend is because this higher time frame is actually showing you or indicating where the market is going. So if you know that the market is here, this green candle, it started going up, then the case may be what you should be looking at right here is that the market is naturally going on an uptrend. So let me show you real quick. So if you know that the market is going on an uptrend right here is going on an uptrend.
sir, I'm just gonna say something and you tell me if it's correct.
Hold on a second.
Right.
So right here, you notice these two green candles, they're going up, right? So that
Yeah.
now is indicating that it's going up, right? On a 4 hour time frame, because this is a higher time frame in hours. So 4 hour is more than 1 hour, 3 hour, or 50 minutes, correct? It's a higher time frame. So if you see what the higher time frame is doing, quite naturally, what the 1 hour, 30 minutes, 15 minutes, or 5 minutes, or 1 minute will be following what that is saying. So what I'm saying? So the reason why the 4 hour is here is to actually give you an idea where the market is going. Then you reverse and you check it to see what is what. And this timeline here, the hour. So you do an assessment on the hour. Also, you need to look into the market as it relates to other things. So for example, let's zoom in for a minute. Let me show what I'm talking about. So right here on our time frame, you're gonna realize certain things, right? You're gonna see that the market is moving in a different kind of way. And what do I mean by this? It means that, let's see something here. Fibs. I'm gonna take out the fibs. Let me just clear this real quick and go back to 4 hour time frame. All right. So what we're gonna do now is that I'm gonna show you how you do the analysis on a 1 hour time frame. Going out, back. So that now you can see the different patterns in the market. So remember now, we're looking at how the market contracts, expands, and what?
Go when it's going into a trend.
Right. So a market only can do 3 things: either expands, go into a trend,
A
or
contract.
contracts. Right. So what we're looking at here is I'm going to show you to identify these 3 things. Okay. So basically, if you look right here, you'll see the market right here. It contracts, then it expands, then it go into a downtrend. Then it go up. This is called a trend. Going down, it is bearish. Going up is bullish. You may want to write that down. And also, if it goes up and down, those are called trends. right? It can go up, down, or crossway. So three ways the market can go. Market can go up, market can go up, market can go down, change that to red.
Sorry, could you repeat what you said was bullish and
When the market is going up, right, it is known as bullish, right? I'll send you guys some more videos on that as well. It's also in the Earthwell Trade Legends Academy group. You guys need to watch the videos that I post in there. I'll send you guys some more. But right here where you see the candles going green, going up, that is known as bullish. Okay,
bullish?
bullish.
Mm-hmm.
So you can write that there and say that is bullish or just bull. All right. So you need to know that. Okay, so that's right there is bullish, and bullish normally is in green.
Mm-hmm.
So you can go template, change that word to green. All right.
And when it's go, what is it called when it's going down?
This is called bearish. So this red candle here going down is called bearish. Okay. Everybody following
Yes,
so
sir.
far?
Yes, sir.
So you have bearish and bullish. Okay.
Mm-hmm.
Bear, like a bear, rich. Right. And bearish normally goes in red. So that itself right there. So if I should actually just pin it on it, if I can zoom in a bit, go here, you'll see it. So here it is. Okay. Very important. So here you'll see on a time frame here, it's going up. That is called bearish. Going down, red, bullish, going up, bearish, going down. Okay, clear?
Yes, sir.
Sure?
Yes, sir.
Okay. All right, so on the time frame now, we're gonna look at other areas, right? So I want you guys to identify certain areas. So we're gonna identify other areas on the chart, okay? So I want you guys to look at this and tell me, what are you seeing? So let's go back to this area right here. We know this is bullish, bearish. We understand this. The reason why it is bearish is because it's going down, and bullish because
Down,
it's going up, right?
up.
Now what you need to
Mm-hmm.
understand is this,
And trend and the trend is when it's going up and down.
right? So
All right.
trend, no, trend can be any direction.
All right.
So
Trend can be anything.
any direction. So the trend can be, this is a trend going up here. So let me just put this here. This is on a higher time frame, by the way. So if you look right here, from here, let's move this up. From here, all the way down here, all the way up here. Let's move this real quick. Right here, all of this right here is known as bullish. It's going up. See all that green candle?
Yes, sir.
So I'm gonna move this red candle. I was just using that on a next time frame, which is the hour. So I'm gonna change that around now so you can understand it. So right here, you realize that that's become a downtrend. So before you can even understand that much, right? Now what I want to show you is here. From here to here. Very important. That right there is called a bearish trend because it's going down. Bullish trend because it's going up.
Oh.
Right? So this is why these charts are so important. Right? Now, inside of doing all of this good stuff right here, there's 3 steps that is happening right in front of you that you need to identify. Okay? What is?
Yes, sir.
Let's go. So a market can go in 3 different stages, right? We say it what?
Mm-hmm.
It contracts.
And contract, expand, and move in a trend.
So right here is contracting. Here it expands and then go into a trend uptrend. Then if you look at it, say contracts, all of this right here is contracting. Contracts right here. And then it goes into a trend, go into a trend. Then here it contracts again. So it's going down. So that's called a trend. Then it expands.
Sir,
go into a trend.
Sir,
listen, just listen. It contracts again here. When it contracts, it's going sideways. So look and see where all the candles are going sideways, basically. So right here, you'll see that it contracts here, contracts here, it contracts here, it contracts in here. So it goes into a trend, then it contracts here. So what I'm saying? Then it expands.
Yes, sir.
And go into a trend. So contracts, then it expands. Why expands? When something expands, it gets more, right?
Yes, sir.
So right here is a classic example. So if you look at this right here, you see that it go across, contracts, then it expands and it go into a trend. Okay, same thing is happening here. Contracts, expands, and then go into a trend. So right here, it what? Contracts, expand. So this is going up, and then it goes down in a trend. So right here becomes going down, it's bearish. Then it contracts again, expands. See it? You see it played out? It's just that these with the bigger candles, but I want you guys to understand it. Right here it contracts, expand again, and then go into a trend. See? This trend going down, and that is on a 4-hour time frame. Normally we do the analysis on a 1-hour time frame, but I just wanted to zoom that up so you can see it. So I'm gonna zoom it out so you can see it, what it looks like on an hour chart. So we do the markups on an hour chart. Got it? So if you look clearly now, you will see the same thing playing out. It contracts here, see it? Goes into a trend. Expand and go into a trend. Contracts, expand, go into a trend. And all of this right here is called a trend going down. So all of this right here, is called a bearish market.
Bearish trend.
That is a bearish trend. So you can identify it. Very important. Right? And then you will see right here where the candles look like all of them not moving against each other. They're going across. That is what is called what? Contracting.
Contract.
And the next word for contracting is what? Consolidation.
Consolidation.
The market is consolidating. It's going across. It's not going up, it's not going down. This is the part in the market, you may want to write this down as well. This is the part in the market where you sit on your hand. You don't do anything. You don't enter the market. You just wait. Right? So it contracts right there. You wait until it goes into a trend. Next thing I need to teach you guys is that after the market contracts, and it expands, it's going to give you a candle. Candle is known as an indicator candle. This candle is known as confirm. So after a candle indicates, you wait on a second one for it to which direction it's going to go. So the candle here, this is known as an indicate candle. You wait for the second candle for confirmation if the market is actually going down. Got it? So after the market contracts and start to expand, here it plays out here again. So let's do it right here. Let me zoom this up a little bit more. I don't expect you guys to get this on the first go, but it's good to point it out, right? We're gonna do a lot more charts
Yes.
so you will catch it, right? Here, the market is consolidating, it's going across. We got that, right? This candle here is an indicator. So you start with this one, then this one confirms that it's actually gonna go up. And you have to look at the top of the wick. So you look at the top of the wick right here. I'm gonna make this line a little bit more thinner. Give you a thinner line so you understand. So right here, guys, pay attention to here. Right here. See this line?
Yes,
Good.
sir.
Watch this now. I'm gonna put it right here. You see this candle right here? After the market went down in a bearish state, this is what the candle is. And it goes to a higher time frame. That's the highest it's been to. And it go all the way down to the 50, moving average of 50. You realize? Which is the blue line here, right? Now, the higher time frame, 50, then a moving average of 8 and 13.
13.
So you realize that up here, the 8 cross the 13, you make an X right here, right? Right here. Got it? Right here. Right here. So that means case maybe it's showing you know that their timeline has changed. So it's moving between a lower time frame and a higher time frame. So the possibility of it moving up is far greater. That's what the indicator is saying, right? Now, if you look right here, after it goes here, it's consolidating to right here. So this right here is all consolidating. Going to start to go across. So what I'm saying, this candle here, top, bottom, you have space between the bottom and the top of the candle. See? Both sides of the candle have a wick. Wick is burned out there, and this candle is exhausted. That's what I'm saying. So the time frame here go across, so it's half and half basically. So you can see it plays out on this candle right here. Go across each other. It's in the middle, the next. This candle here start to indicate where we're gonna go. We're gonna go up. So this candle here, you'll watch it if you're in the market to see what this candle is actually doing. So this candle confirm that yes, it's actually gonna go up. So you realize this is shorter, this is longer. See that bit there?
Yeah, yeah.
You realize this bit right here is longer than a little bit right here. And here is shorter. So the case may be it's going up. So this is an indication and it going up. And that's why you get into this trend right here. From here to here. See that?
Yes, sir.
So that, my friend, we'll call it bullish. Start going up. So this indicates we're going to learn more about candles and to actually read the candles. You know what I'm saying? So here it contracts, then it expands, and then it goes into a trend. See, very much contracts, go sideways, then it expand. When something expand, it means more. In this case, it's a bullish market, so it's going up, and then this is it, all of that. So how much pips is this? All of this right here, this big candle. Use this plus sign here, right? This is a crosshair, and you touch it from top, you hold it down, and you press and you drag it all the way down, and you will see that. How much is it? See that? That's 13 pips right here. So the first two numbers, that's 13 pips right here. Okay. So what you do, click on here, plus sign, hold it, and drag all the way down to the bottom of it, and you'll see it. Okay, 13 pips. Got it? So that's in itself, my friend, is what you call now what? Contract, consolidate, contracts, expands, and go into a trend. Okay?
Yes, sir.
Right. So that's in it how it is. And then if you look here, so that's a bullish right here. Let's go and do a next example. And after which, so that's a bullish.
A bullish trend.
Bull means green going up, ranging bull. Remember that. Right, so that's how we see this one right here. We understand that. Now if you skip along, go along, we're going to use the same thing here. Same example. The market can only do three things: contracts, expand, or go into a trend up or down, right? Or sideways, right? Three things you can do. So right here, watch this now. Same thing here, going down. We just explained bullish. Now we're going to explain bearish. It's going down. So when you see this in the market, you can identify it. So right here, the market contracts. See that?
Yeah.
Good. So after the market contracts, here, now going up or higher, contracts here. Now we still do it on a 1 hour time frame. Notice on our time frame, you realize that here again, it crossed the 8 Fibonacci, the 8 moving average, moving average with the 13, cross here again, cross here again, and this candle right here, the green one, is a bullish candle, but they cross each other, right? So as you go along, you realize that it started to take into a state. It started to consolidate again, start to go across. So after the market goes into a trend, quite naturally, then they follow after, it goes into a contract state. So here it's going to start to contract, indicates, reverse, goes down into a trend, right?
Sir, so whenever
so look here now. So, hold on. So look here, right here. I'm gonna answer your question after, but look here. You see here, you notice these are smaller candles. You notice they contracts and it expands, then it retests. Then this is a bigger candle than this one before. You realize? So it expands. There, go 4 pips. Here, it retests, and then it comes back here again. It's about 5 to 6 pips. And then it goes into a trend. So don't watch this candle here. This green candle here is called a test, a retest. So the market is always going to have a retest, right? And then it goes into a trend. So all this right here is a trend. All that right there is a trend. And this right here is a bearish trend. Got it? You can ask a question, I know. I needed to just pay attention. Hello? Tajay? What's the question? Hello?
I'm not sure if you can hear me, but I have questions. What exactly are pips, and what's the purpose of the retest?
The retest in the market is actually to see how the market is moving against each other, or the bullish or the bear fighting against the bull. So you're gonna have a tug of price. So what we're gonna look at next, we're gonna look at price action and market structure. So here is a part of market structure and price action. So price actually affects the market. So these are some of the things that we need to look into the next class as well. So you need to learn about price, write it down. You need to learn about price action. Market structure. Okay, price action and market structure. You guys, I'm gonna touch that based on that third lesson right there with that. I just want to touch base on to point this out. This is how it is in the market. So we're gonna set up the charts today, and I want you guys to know that these things exist and the 3 stages that the market can go into. Right? We understand?
Yes, sir.
I think these are quite a bit.
My internet was giving some issues. So my question was, whenever.
Yes, go ahead. Whenever what? I don't hear again. The mic
Yes,
on
sir.
again, right? Go ahead. I'm waiting to hear you. Ajay, I'm not hearing you. What happened to your mic? Come on now. I'm not hearing it, Ajay. What happened? Ajay, I'm not hearing you. Ajay, I'm not hearing you. I'm not hearing it, Ajay. You need to turn on your mic. Whatever that you did, I don't know, young man. All right, guys. Still not hearing you guys, you know. I don't know if there's something is wrong.
I'm here. I'm just watching.
Sir, so before I had some internet issues. So my question was, where the pink line and the white line meet and form an X, is that necessarily an indication as well that there will be a contraction?
Right. More likely. That's why they're there. They're called indicators. So you need to know how to read the indicators as well. So if you look right here, you see this right here? this U right here. So if you notice all of this right here, right? All of this right here, you know, from here to here, all that is a downtrend in the market. All of that is a downtrend in the market. And what's going to happen is that if you look at the timeline, look here, look at the dates here, all this happening in the 6, you know, right? So between here to here is a day, okay? Now, what we're also looking at is all of this happened on a downtrend. This timeline here, as equivalent to the moving average of 8, is going down. It's below the 13 and it's above the 8, heading on to the 50, which is a higher time frame. Low, 8, 13, and you realize right here, it cross each other. And then it makes a run for it. Now the 13 is at the bottom, 8 is on top, and the moving 50 is up top. It don't come down here as them. It goes up top. So when it cross here, this 50 moving average remain at the top. It didn't go down here at the bottom here, underneath here, did it? Stay up here. So that tells me now that the market, after it goes into a contract state, expands. This is known as a retest right here. And then it start going to a trend. See? And then it go all the way here. That's all it was. So this candle right here is called a retest. Remember that you have to have the retest. You can identify them right across the board. If you look right here, you'll see, even though all of these are red, you get a green one in here. This is not a retest. This is confirmation. This is indication that is going to go down, indication. And then this goes for confirmation that is going to go down. See it? So it's a retest. You see the retest, and then it goes into a trend. So retest, trend. Bearish, bullish, contracts. So after it contracts, it goes into expansion, then go into a trend. Very important. 1, 2, 3. Can't miss. It contracts, expand, and then go into a trend. And this is an uptrend. Same thing up here. Contract, then it expand, then it go all the way down here into a trend. Then it retests, continue down in a downtrend. So I'm saying, very easy. Here, consolidation, expand, go into a trend. Got it? So you can see it right across the board. You just have to look to see it. Same thing. So the market can only go in 3 different ways. Understand? Hope you guys understand.
Yeah, man, understand.
Very simple, very straightforward. And the reason for the 4-hour time frame is what? Why we use a 4-hour time frame? You can use
It's
this
to
arrow,
see
by
the
the way.
direction in is the 4-hour time frame is used to see the
To see where the
direction.
market is going.
Is used to see the where the market is going in terms of
Mhm.
contracting, expanding, and going into a trend.
So you look at the end candle, right? The last 2 end candles, and you see the market is going. So this is telling me now the market is on a higher time frame. The 50 is up there. So it's trying to reach back to the 50, to
Going.
the higher time frame. Right? All of this, the market is recycling right now. Right? So after I've done all of this, so all of this right here, if you look at it on a higher time frame, all of this is bearish.
Mhm.
See what I'm saying? All of this right here
Bullish.
is bullish. All of this is bullish. Right? All of that. All of that.
Mhm.
And if you look right here, look. trying to show you guys what to look for right here. You see the 50, 50, 13, and 8. The 8 and the 13 cross right here. Realize? So whenever the time frame them cross each other, it goes into a trend. Very easy to identify, right? Right there. I came up with all these formulas right there. Bright as day. Right there. So the pink line cross with the white line, and then it goes into a trend going up. Can be going trend down or
Down
up.
or up.
So remember that trend can only go up, down, or sideways. 3 ways it can go, right? In this case.
Span contract.
So as you go ahead, and this is on a 4-hour time frame, and we look here to see where the candle, the indication is going right now. Okay.
Trend.
So what you also need to look at, guys. So that in itself is 4-hour. We'll do the analysis on a 1-hour time frame. Right? Very easy, very straightforward. And you can see this plays out right across the markets. Right? You'll see all the areas there. See that? So all of this what we did on the 4-hour time frame, it shows you. This is what happened. So this line right here, bearish, bullish. So it shows differently on different time zones. So what you're looking at the chart now is on a 1-hour time frame. You go back on a 4-hour, it's gonna look different. And it depends on how you zoom in and out up here as well. Okay? Got it?
Yes, sir.
All right. So I think that's us for today. Been a lot of things being said. This video will be uploaded to our YouTube channel and Facebook channel group, so you guys can watch it again, see if you guys can get it. And you know, we need you. We needed to understand that. Needed to understand that right now. Needed to understand that. So let's push for that, for learning more. All right. So thank you guys for having me. Let's push for our next class is going to be, I'll let you guys know by later on when is next class going to be. I'm thinking about Friday or Saturday. Okay. I need to check the schedule. All right. Thank you so much. Have a wonderful evening. Bye-bye. Bye-bye.